What if the real reason you can't buy a home is because you weren't meant to? Why is every home in America rising in price except the one you're trying to buy? What if the housing crisis isn't a crisis, but a business model? Why does a $450K home now cost you $1 million? And who designed it this way? How did owning a home become the biggest financial trap in American history? Who turned your future home into Wall Street's monthly paycheck? The biggest lie in America is that hard work buys you a home, but the housing market was engineered so you never win. Everyone grew up hearing the same promise: study hard, work hard, save money, buy a home. That promise is dead. Not because people stopped working hard, but because the financial system quietly turned housing from a human necessity into a global profit machine. And here's the part nobody wants to admit: the housing market isn't broken. It's working exactly as designed. Because homeownership is no longer about shelter. It's about debt, interest, speculation, inflation, and government-engineered scarcity. Look at the numbers. In 1950, the median home cost 2.2 years of income. By 1980, it was 4.8 years. Today, in 2025, it's 8.5 years, the highest in recorded American history. That's not an accident. That's a policy. What changed? Not the houses, not the materials, not the labor. What changed was the system. A system designed to make you believe you're climbing upward while quietly chaining you to the largest debt of your life. The dream didn't die. It was. Politicians love to say, home prices are rising because there aren't enough houses. That is a lie. Housing didn't become unaffordable because America stopped building. Housing became unaffordable because America changed who houses were being built for. The new target buyer isn't the family. It's the fund, the REIT, the private equity group, the foreign investor, the algorithmic landlord, the institutional money that doesn't live in homes. It extracts them. To understand the housing crisis, you have to understand the real origin story, which nobody teaches. The U.S. government created the modern housing market. In the 1930s and 1940s, federal policymakers made 3 decisions that would permanently reshape America. Decision number 1: invent the 30-year mortgage. Before the 1930s, mortgages lasted 5 to 10 years. Homes were cheap, and debt didn't dominate your life. Then FDR created the 30-year mortgage, FHA-backed loans, government guarantees, which meant banks could lend infinite money with minimal risk. Decision number 2: create Fannie Mae and Freddie Mac. These weren't housing agencies. They were debt multipliers. Every mortgage they bought, every loan they guaranteed, injected more fuel into the housing bubble machine. Decision number 3: tie the American dream to homeownership. Not because it made people safe or secure, but because it kept the economy alive. The truth? A house isn't your dream. It's the government's GDP engine. When they say housing drives the economy, what they really mean is your debt drives the economy. This is why every U.S. recession for 70 years was fixed the same way. Lower interest rates, easier mortgages, cheaper borrowing, more household debt. Your financial trap is a national strategy. Between 2011 and 2023, Wall Street bought 1 in every 7 homes in major U.S. cities. Investors purchased 28% of all starter homes. One company, Blackstone, became America's largest landlord. Corporations began buying entire neighborhoods, sight unseen. The result? Prices rose 70% faster than wages. Rent rose 300% faster than inflation. The average American must now work 126 hours for 1 month of rent. This isn't a market failure. This is a market redesign. Housing stopped being built for people It started being built for balance sheets. In the 1950s, developers built homes to live in. In 2025, developers build homes to maximize yield, leverage, tax benefits, and investor demand. Your home became an asset class, a product, a financial instrument. And once that shift happened, owning a home went from being the American dream to being the American gamble. Here's what actually happened. When millions lost their homes, private equity firms moved in and purchased properties in bulk at 40 to 60% discounts using money created by the Federal Reserve. Homes that once belonged to families became rental assets. Neighborhoods that once held communities became corporate portfolios. And today, those same firms are charging rent prices that working families cannot escape. 2008 wasn't an accident. It was a transfer of ownership, a transfer of wealth, a transfer of control. It became the blueprint for the housing debt trap. For 40 years, Americans were fed the same message. If you don't buy a home now, you'll never own one. This wasn't harmless advice. It was the most profitable psychological manipulation in American financial history. Here's the truth no realtor, bank, or politician will ever admit. Home prices don't rise because homes are valuable. Home prices rise because debt is profitable. Banks need you to believe housing only goes up. Developers need you to fear being priced out. Politicians need rising home values to keep voters feeling wealthy. And Wall Street? Wall Street built an entire empire on the idea that your fear is our business model. That's why every decade, whenever housing slows, the same players push. First-time buyer programs, low down payments, interest-only options, zero-down loans, adjustable rate temptations. Buy now, refinance later. The biggest modern con. These aren't solutions. These are financial traps designed to keep you borrowing until the system breaks. Housing isn't expensive because homes changed. Housing is expensive because debt is America's most valuable export. Most Americans don't realize the true cost of buying a home. A $450,000 house with a 7% mortgage rate becomes $1.06 million total repayment, $600,000 in interest alone. 30 years of financial captivity. You pay 2.4 times the home's price. This is not financing. This is indentured debt. And that's assuming no refinancing, no job loss, no medical emergency, no forced move, no interest rate spike. Here's the hidden mechanism. Banks earn more when homes get more expensive. Banks earn more when rates rise. Banks earn more when you struggle. The mortgage approval system doesn't measure affordability. It measures how much debt they can strap to you without breaking you immediately. SLE. This is why interest rate hikes benefit banks. High home prices benefit banks. Collapsing affordability benefits banks. Refinancing waves benefit banks. Even defaults benefit banks. Because your debt gets sold again. Worse, mortgage approvals aren't based on affordability. They're based on your ability to make the bank rich. Here's the hidden math. When interest rates rise, the bank earns more interest. When home prices rise, the bank earns more fees. When you struggle, refinancing earns them more profit. When you default, they sell your debt at a premium. No matter what happens to you, the bank wins. This is the core of the housing debt trap, a system where every path you take leads to someone else's profit. There was a time when owning a home meant something simple, a place to live, a place to raise a family, a place to build stability. For 40 years, wages stagnated, while the cost of housing grew 8 times faster. Let's break the illusion. In 1970, the median home cost 2.6 the median income. In 1990, it was 4 times income. In 2023, It reached 7 to 10 times income, depending on the city. But look deeper. Adjusted for inflation, the median wage has barely moved since 1979. Meanwhile, home prices plus 500%, college plus 1,200%, healthcare plus 600%, rent plus 300%. This isn't coincidence, it's coordination. But around the mid-2000s, something shifted. Wall Street discovered something lethal. A home is more profitable as an asset than as shelter. That's when they created the 3 financial weapons that broke American housing. Weapon number 1, mortgage-backed securities, MBS. Your mortgage wasn't just a loan. It was chopped, packaged, sold, leveraged, insured, resold, and weaponized. Weapon number 2, private equity landlords. After the 2008 crash, Wall Street bought hundreds of thousands of foreclosed homes for pennies, then rented them back to the same Americans who lost them. Blackstone, Invitation Homes, Cerberus, Progress Residential. Your home became their portfolio. Weapon number 3, algorithmic pricing. Behind the scenes, companies like Zillow, CoreLogic, RealPage, Black Knight created pricing models that inflate rents and synchronized home price movements nationwide. Your rent didn't rise because your neighborhood improved. Your rent rose because an algorithm decided it should. In 30 years, America went from homes, community assets, to homes, financial weapons. Wall Street didn't break housing. Wall Street reprogrammed it. For decades, Americans believed lower interest rates were a gift. But here's the brutal truth. Low interest rates were the fuse that blew up the entire housing market. Between 2009 and 2021, mortgage rates hit historic lows. The Fed printed trillions. Banks issued cheap credit. Wall Street bought entire neighborhoods. Foreign investors flooded U.S. real estate. Cheap money created fake affordability. Because when rates fall, prices rise even faster. High rates, 2022 to 2024, did this. Monthly payments doubled. Inventory collapsed. Homeowners couldn't move. Renters remained trapped. Buyers were forced out entirely. Example, a $400,000 home at 3% equals $1,686 a month. The same home at 7% equals $2,661 a month. That's $35,000 extra interest every year for the same house. And here's the part the real estate industry never says. Banks made more money with high rates than low rates. Low rate era equals volume profits. High rate era equals interest profits. Either way, they win. You lose. This is why the Fed calls housing too expensive, while continuing policies that keep it expensive. Housing is functioning exactly as designed, to extract maximum lifetime income from you. Housing is expensive because we don't build enough. But here's what they don't tell you. We don't build enough because the system was designed to restrict supply. Let's expose the real culprits. 1. Zoning laws, the silent killer. Single-family zoning blocked multi-unit construction in 75% of American cities, designed to protect neighborhoods, but really designed to protect property values. 2. NIMBY homeowners, not in my backyard. Every time a city tries to build affordable housing, middle-class homeowners fight it because they fear property value drops. They fear density. They fear change. The consequence? Artificial scarcity. 3. Local governments. Cities rely on property taxes, land transfer taxes, permitting fees, development fees. Building fewer, more expensive homes equals more tax revenue per unit. Affordable housing isn't just unwanted. It's unprofitable for the people who regulate it. 4. Construction monopolies. A handful of corporate builders dominate the market, deliberately restricting output to maintain high prices. Some years, they literally build fewer homes than demand requires, just to keep prices elevated. 5. Wall Street buying land. Private equity firms now buy land not to build, but to hold, waiting for prices to rise. This is not a supply shortage. This is supply sabotage. And Americans pay for it, every month, for 30 years, with interest. Here's the new reality. Since 2011, the U.S. housing market quietly shifted from owner-occupied to corporate-owned. Fact. BlackRock, Blackstone, Invitation Homes, Pretium, American Homes for Rent now collectively control over 500,000 single-family homes. In Atlanta, Phoenix, Tampa, Las Vegas, investors bought 40 to 50% of all homes in certain zip codes. One Wall Street buying spree increased local prices by $33,000 per purchase. Companies use AI to bid on homes within minutes, outbidding humans before they even schedule a viewing. Why? Because a house is no longer a home. It's a yield-bearing asset, a securitized product, a rent-generating machine, a hedge against inflation, a financial instrument. Families buy homes to live in them. Wall Street buys homes to leverage them. If you want to understand why housing is unaffordable, look at this. The U.S. tax code rewards people who own multiple homes and punishes people trying to buy their first. Let's expose it. Advantage number 1, rental income tax benefits. Landlords can deduct mortgage interest, property taxes, repairs, depreciation, management fees, insurance, maintenance, travel expenses. You, the homebuyer, can deduct almost nothing. Advantage number 2, depreciation, the wealth multiplier. Landlords can claim a property is losing value each year, even as it increases in price. This fake loss is used to reduce taxable income. Advantage number 3, 1031 exchanges. Landlords can sell a property, make millions in profit, and pay 0 taxes, as long as they buy another one. Try doing that with your salary. Advantage number 4, capital gains tax rules. If corporations buy and sell properties, their gains are taxed far lower than your active income. The system is telling you, don't own one home, own many. If you think the U.S. government wants cheaper homes, you've misunderstood the entire system. America is now addicted to high home prices, not emotionally, financially, because housing isn't just a place to live. It's the collateral for the entire economy. Look at the dependency. Roughly 70% of U.S. household wealth is tied to housing. Local governments get 40 to 60% of their revenue from property taxes. Mortgage-backed securities support a huge slice of the bond and credit markets. Consumer confidence, elections, and GDP all move with home values. If home prices crash, homeowners feel poorer overnight. Banks lose collateral value. Pensions and insurance portfolios take massive hits. Local governments lose tax revenue. The stock market gets dragged down. Politicians get voted out. So what does Washington do? It quietly selects the winner: high prices over affordable lives. Instead of letting housing reset, they use Fannie Mae and Freddie Mac to keep mortgage credit flowing even when the market should cool. Bail out banks anytime real estate gets too dangerous to their balance sheets. Keep zoning, permitting, and land restrictions in place that lock in scarcity. Stimulate the economy by pushing cheap credit into housing first, knowing it inflates prices. The result? Every housing fix ends up being a price support program. They're not defending your dream. They're defending their system. In a healthy economy, housing would be a cost of living. In America's economy, housing is the core asset that can never be allowed to fall. There's a brutal logic underneath the housing system. A citizen with a paid-off house is stable. A citizen with a massive mortgage is controllable. Debt doesn't just fund your home. Debt funds the entire machine. Here's how the housing debt loop really works. 1. You take on a 30-year mortgage. You commit your future labor to the bank. 2. The bank securitizes your mortgage. It's turned into bonds and sold into global markets. 3. Investors and pensions buy those bonds. Your monthly payment becomes their safe income. 4. The government relies on those markets. Mortgage-backed securities help keep borrowing costs down and liquidity flowing. 5. Politicians protect this chain at any cost, because if housing collapses, credit collapses, and the illusion of stability dies with it. So when you hear, "Homeownership is the American dream," translate it. Your debt is the backbone of our financial system. That's why every part of the system is built to keep you locked in. 30-year terms, so you're never truly free. Property taxes, so even when you own it, you still pay rent to the state. Refinance waves, so you reset the clock every time you struggle. Cash out refis, so your home becomes an ATM whenever rates fall. A house was supposed to give you security. Instead, it became a tool to extract lifetime cash flow from you. The dirty secret: they don't need you to own the house. They just need you to finance it. Millennials and Gen Z were told two conflicting lies. Lie number 1, if you don't buy a house, you're failing at life. Lie number 2, if you can't buy a house, it's your fault. You drank too much coffee and ate too many avocados. Both lies serve the same purpose: to hide the fact that the system was never designed for them to own. Look at the reality. Wages have been almost flat, inflation-adjusted, since the late 1970s. Housing has increased 5 to 8 times faster than income, depending on the city. Student loan debt now traps millions before they even think about a down payment. Healthcare, childcare, and basic living costs swallow any potential savings. Then layer this on top: investors outbidding first-time buyers with all-cash offers. Corporate landlords buying entire neighborhoods, not just single homes. Algorithms setting rents higher in every desirable city. Remote work allowing wealthy buyers to invade cheaper markets and bid up prices. So what does that produce? A generation that rents longer, moves more often, has children later or not at all, carries debt instead of equity, watches the latter get pulled up in real time. And the cruel irony? The same older generations who benefited from cheap homes and rising equity now vote to keep zoning rules, tax benefits, and policies that lock younger generations out. This isn't just a financial divide. It's a generational extraction. One generation used housing to climb. The next generation is used to hold the ladder. Most people think renting is just a phase before ownership. For millions now, renting is a life sentence. Not because they're lazy, not because they don't try, but because every force in the system pushes them in one direction: permanent tenant, permanent payer, permanent asset for someone else. Here's how the trap locks in. 1. High rents kill savings. When 40 to 50% of your income goes to rent, you're not saving for a down payment. You're funding your landlord's equity. 2. Down payments keep rising. As home prices soar, 20% down becomes impossible, especially when wages don't move. 3. Credit standards tighten after every crisis. Each financial shock leads to stricter lending rules, which punishes those already on the edge. 4. Cost of living absorbs everything else. Food, gas, healthcare, insurance. They all rise faster than income. 5. Your rent is someone else's retirement plan. Landlords, REITs, private equity, pension funds, all rely on your monthly payment. By the time you finally earn enough to buy, the market has already moved again. So you're told, move farther out, buy smaller, take on more debt, just stretch a little more. But stretching never ends. You're always one crisis away from losing it all. This is the final stage of the housing debt trap, a society where ownership still exists, but fewer and fewer people are allowed through the door. Everyone else, they don't own the game, they fund it. Inflation is sold to the public as an unfortunate side effect of economic growth. That is propaganda. Inflation is not an accident. It is a deliberate policy choice used to protect asset holders and punish wage earners. Here's the brutal truth. Inflation raises home prices. Inflation raises rents. Inflation raises land values. Inflation raises the wealth of homeowners and investors. Inflation destroys the purchasing power of renters and buyers. This is why the Federal Reserve has tolerated inflation. Because inflation does one thing extremely well. It transfers wealth upward. Look at the last 25 years. Home prices increased 163%. Wages increased 18%. Rent increased 142%. Construction costs, 54%. Land values, 228%. Inflation didn't just happen, it was engineered. Because high home prices keep the U.S. financial system solvent. Every homeowner cheers inflation. Every renter is crushed by it. For 70 years, America was built on one idea. A middle-class family should be able to buy a home. That idea is dead. Not because the middle class failed, but because corporations realized they don't need a middle class anymore. Here's what changed. Corporations began competing against families for homes. And they have every advantage you don't. They buy in cash. They waive inspections. They close in days. They outbid you by $20,000 instantly. They use algorithms to spot undervalued homes. They securitize homes to borrow even more money. They face almost no regulatory barriers. That's why in many cities, 45% of all starter homes are owned by investors. Major firms own entire subdivisions. Build-to-rent communities replaced build-to-own. Corporate landlords raise rent 2 times faster than mom-and-pop landlords. Homes are being turned into subscription products. Here's the part that should terrify every American. Corporations don't need affordable homes. They need profitable tenants. The disappearance of the middle-class homeowner is not a glitch in the system. It is the system. Even if you somehow escape the rent trap, even if you manage to buy a home, the system has one final weapon: ownership cost inflation. Because buying a home is only the beginning of the debt story. Let's expose the 3 traps most homebuyers never see coming. Trap number 1, property taxes. Property taxes increase when home values rise. So in a rising market, your home doesn't make you wealthier. Your local government makes you poorer. Example: Texas homeowners saw property taxes rise 181% between 2000 and 2023, even when wages barely moved. Trap number 2, homeowners insurance. Climate risk, corporate consolidation, and reinsurance hikes caused premiums to explode. Florida, 102% in 3 years. California, 61% in 2 years. Louisiana, 122% in 3 years. In some states, insurers simply abandoned entire regions. Trap number 3, HOAs. Homeowners associations are no longer community organizations. They are mini-governments with unlimited power. They can fine you. They can place liens on your home. They can foreclose on you without court action. They can raise fees every year. HOA fees have risen 37% faster than inflation since 2000. The truth? You don't own your home. You co-own it with the bank, the insurer, the HOA, the tax assessor. You bought the mortgage. Everyone else bought the control. When a country's housing system becomes unaffordable, one outcome becomes inevitable: a permanent renter class. And in the United States, that transformation is nearly complete. Here's how we know. A home ownership for people under 35 is the lowest in 60 years. Rent consumes 40 to 60% of income in major cities. The average down payment requires 12 years of savings. Student debt blocks mortgage approvals. Wage growth collapsed while rent soared. For millions, renting isn't temporary. It is a life sentence. But the rent trap has deeper layers. Once locked into renting, you can't save for a down payment. You can't build equity. You can't relocate easily. You can't escape rising costs. You can't accumulate generational wealth. Rent isn't just a payment. It's a barrier between you and the system that was designed to keep you indebted for life. And here's the secret corporate landlords don't want exposed. Every renter who can never buy a home is worth far more to Wall Street than any homeowner ever will be. Americans were told foreign buyers were a small part of the housing market. That is false. Foreign money reshaped entire cities, not by numbers, but by purchasing power. Look at the facts. Fact number 1, they buy above asking price. Foreign buyers often pay 10 to 30% over market value. Domestic buyers simply can't compete. Fact number 2, they buy in cash. Cash offers dominate, pushing financed buyers out. Fact number 3, they park wealth, not families. Homes become empty investment vehicles, tax shelters, currency hedges, wealth vaults. In cities like Los Angeles, New York, Seattle, Miami, and Austin, up to 1 in 6 new condos are owned by foreign investors, many sitting empty. Fact number 4, they raise prices systemically. Even small volumes of high-bid purchases create higher comps, higher appraisals, higher property taxes, higher listing prices. Your affordability didn't collapse because you failed financially. It collapsed because you were outbid by global capital. Housing prices keep rising, even while birth rates fall and population growth slows. Why? Because the U.S. housing market isn't driven by population anymore. It's driven by capital flows. In a healthy system, more people, higher demand, higher prices. Fewer people, lower demand, lower prices. But the modern system breaks this logic. Today, empty homes sit as financial assets. Investors buy faster than families are created. Retirees downsize slower than expected. New immigrants drive competition in rental markets. Senior households remain in large homes due to lack of options. The result? Home turnover collapses. Inventory collapses. Prices soar, even when fewer people are buying. Demographics no longer control housing. Finance does. People assume a housing crash is the solution. It isn't. Here's why a crash won't save the next generation. Reason number 1, Wall Street will buy the dip. Again, if prices fall 20 to 30%, private equity will sweep in just like they did in 2008. They have unlimited credit lines, government backing, no emotional attachment, zero fear of recessions. A crash creates opportunities for them, not you. Reason number 2, supply won't increase. Construction companies slow production during downturns. We saw this in 2008, 2012, 2020. Fewer homes built leads to higher prices later. Reason number 3, Lending standards tighten. Banks become terrified during downturns. That means higher requirements, higher down payments, lower approvals. So even when prices fall, buyers can't buy. Reason number 4. Distressed homes go to investors. Foreclosures used to go to families. Not anymore. Today, 70 to 80% of foreclosures in many cities go to hedge funds, REITs, institutional landlords. A crash won't fix affordability. It will accelerate the shift toward corporate ownership. If you've watched this far, you've probably realized something. This crisis wasn't created by mistakes. It wasn't caused by supply shortages. It wasn't driven by demographics alone. It wasn't due to bad luck, laziness, or lack of effort. It was engineered. Engineered by the Federal Reserve, Fannie Mae and Freddie Mac, Wall Street, developers, tax policy, investors, local governments, global capital. Each layer built on the last, until the system no longer served the public, only the people who profit from debt. Here is the ultimate truth. America doesn't have a housing market. America has a housing extraction machine. It extracts your savings, your wages, your future income, your stability, your ability to form a family, your chance at generational wealth. You were never meant to win this game, because the modern housing market isn't designed for ownership. It's designed for dependence. And the sooner Americans understand this system, the sooner they can stop blaming themselves for a trap that was built around them from the start. Before you click away, remember this: the housing debt trap wasn't an accident. It was engineered. For decades, Americans were told the same story: work hard, save money, buy a home, build a future. But now you know the truth. The housing market isn't about shelter. It isn't about stability. It isn't about the American dream. It's about debt. It's about control. It's about extracting every dollar you will ever earn before you earn it. So if you've watched until now, understand this: you are not the average viewer. You are not part of the majority that stays blind. You are the minority willing to understand the system that runs your life. And that means you're exactly who this channel was built for. Subscribe now, because the only defense you have in a system built on confusion is knowledge. This is MoneyLore Insider, where finance meets mystery, where the truth is uncomfortable but necessary. Don't leave blind. Leave informed. Subscribe.